around our block, on the right side, we have Starbucks, Sumeet. Then there's McDonald's. In front of the building is 7-Eleven. On the left side is KFC and Burger King.
It's like you never left the US, basically.
Yeah. Welcome to this special MSP growth episode of Sunny Silver Linings. Joining Sunny today, we have
Sumeet Sabharwal, CEO, Netgain Technology, and Frank DeBenetto, General Manager, MSP Suite at Kaseya.
Now, here's your host, the visionary founder and CEO of IT by Design and MSP Talent Authority, Mr. Sunny Kaila. Over to you, Sunny.
Hello, Sumeet. Hi, Frank. Welcome to the show.
Thank you, Sunny. It's a pleasure to be here.
Yeah, it's a pleasure to meet you, and thanks for having me here.
I truly appreciate you taking the time to come to my podcast and sharing your insights, your wisdom, your life experience, your entrepreneurial experience. And Sumeet, why don't you tell us about yourself?
Sunny, it's truly a pleasure to be here. For me, I have now been in the tech-enabled services side for 35 plus years. So the venture I'm leading right now is a company called Netgain. We're a vertically focused managed services provider. We really operate, Sunny, at the intersection of deep public cloud expertise, both in Azure and AWS, coupled with very strong industry focus reflected in our go-to-market, reflected in the applications and the ecosystem of partnerships and capabilities we bring. For us, it's tremendous to be focused on what I call the lower mid-market segment businesses that are typically in the 50 to 500 employees in the three verticals, healthcare, legal, and accounting, and accelerate their digital transformation, bring cloud in, bring AI in, and really partner with the stakeholders there, the CEOs, the managing partners, to help build the firm of the future and to help operate that so that their IT groups can focus much more on the innovation side of the pyramid.
Thank you for sharing that. And you have a great operation. I visited you in Boston and had a great time with you. And Frank, can you tell us a little bit about yourself?
Yeah, of course. So thanks for having me here. We're neighbors in New Jersey, great state of New Jersey. So I went to Rutgers University, came out with an engineering degree, only to figure out that I didn't want to be an engineer. So I wound up in the financial services world in the early to mid 90s, and eventually started doing break-fix IT consulting. That morphed into me creating a MSP called Two River Technology Group. So I had that MSP for about 16 years. We focused on financial services, legal, accounting, and nonprofits. Those were our four main verticals. I built that up around 2017. I found a void in the marketplace for a sales presentation tool. One of the things that I struggled with was selling high-value solutions that were technical to non-technical individuals. And oftentimes, I would force them to buy based on price. Because I wasn't the cheapest MSP, I'd lose deals, and it was frustrating. So I built a sales presentation platform. I couldn't find anything else out there, and came up with a methodology which worked really well for me. Eventually, I sold that to Kaseya. And then last year, I actually sold the MSP to a private equity firm. So out of the MSP space, greatly enjoyed it. My role here now at Kaseya, I'm one of the senior executives. I report directly to Fred Vicola, our CEO. And amongst other business units that I run, I'm actually running the M&A concierge platform for MSPs. So we're helping to facilitate what we see now as a lot of movement in the M&A space in terms of buying and selling for MSPs. So that's what I'm doing today. So I've come full circle. It was an MSP. I spent time as a vendor in the space, and now I'm over on the Kaseya side.
So you are the bridge. I have not seen too many people. They have reached to that level, like where you are now with Kaseya, but they have that MSP experience for decades. Because I think that's what it takes to be successful on the vendor side as well. MSPs are maturing up, like a typical MSP that it used to be when I started in 2003. My MSP in New York City, it was different. So now you being there at the center of M&A concierge, do you see anything changing in the M&A space in the channel?
So we see an acceleration for sure of buying. I'm starting to see a lot of first-time buyers that are emerging, and they're more regionalized plays. We see a growing group of MSPs who've been doing this for 20 years ish. I'll call them the $1 million MSPs. It's taken them 20 years to get to $1 million. They're probably not going to get much farther than that, and they kind of understand that. They've got 20 to 30 customers that they've had for 15 to 20 years, very loyal. And they're not necessarily looking to retire yet. They're looking to get acquired because they want to get back to what they really loved, which was being a technician. They never really loved running the business. So I'm seeing a lot of those MSPs start to emerge and raise their hands for possible acquisition. And we're seeing a lot of first-time buyers of MSPs in the regions that they are deciding to do that acquiring. So I'm seeing a lot of movement now in the smaller end of the market, not just for the larger, more mature MSPs.
Yeah, no, that's a great insight. So when you look at a lot of MSPs now, where they are PE backed, they are platform companies, and what I'm hearing from my peers is now there are a lot of buyers, but like when it comes to kind of sellers, there are not too many, or they're having hard time finding right M&A targets because the MSPs that are willing to sell, but they have not sold yet. It's mainly there's something that the business is not ready to be acquired yet. So that's a lot of it. So I mean, so what do you see from the buyer's side and the seller's side in terms of demand?
Yeah, so I'll start with the seller side. So, MSPs don't exactly put the for sale sign in the window, right? Because they don't want to alert their customers. They don't want to spook, their employees, and in many cases, they don't want to alert their competition that they might be looking to sell. So it's a little bit more of a challenge, I think, for seller to potentially find a suitable buyer because they're not advertising it. Conversely, it's harder for the buyers also to find a good target acquisition because, again, they're not necessarily raising their hand. So part of what we're trying to achieve with our M&A concierge platform is to create a mechanism and a platform from a software sense to allow buyers to put in there a profile of what they're looking for, right? And then they could add their charter. So it's searchable based on certain criteria. And then when somebody finds that, they could read more about it and understand exactly what the vision is for that potential buyer. The sellers then can search through it anonymously. When they find somebody that they think is a match, they have the opportunity to say, hey, I'd like to connect with that potential buyer, and thereby creating more of a private type of transaction. So those are some of the challenges that we see. Of course, you mentioned preparation. We do find that most MSPs admit that they're probably 12 to 36 months out from potentially selling. They all cite, I need to clean up my books as the reason, which means that they recognize that they wouldn't be valued as high as they think they should be valued because it's hard to understand, what their books say. So a lot of them are looking for guidance and some recommendations as how to get prepared for that. And we have some programs that we could put them in to do that. And then, of course, the last part is value maximization. Every MSP I talk to thinks it's actually worth more than it is. So we like to help get them and, get them to where they think it's, they'll get paid, something that's appropriate. And we have some programs that we can run them through to help back to maximize that value for them.
Yeah. So Frank, I remember Kaseya sharing this program, and there was some great kind of features or the program value for the MSPs. Like where can people find a little bit more information about this program?
Yeah. So if you go to a website, www.kaseya-ma.com, you can learn all about what's there. You can apply for membership. One thing to note, it's free. We don't charge for it. We do a brief interview, usually about 30 minutes, just to make sure that our interests are aligned and that, that we have something of value that we can bring to the buyer or to the seller and to make sure that they're in the right place. But that's the best way to find us. Also, at all of our major events. So you did mention DattoCon in Miami. Well, we have that coming up again in October of this year. We have an entire pre-day that is dedicated to it. So there's a lot of great thought leadership, some fun sessions around it, and of course the opportunity to do some networking. So that's another place that you can come to learn more about the platform.
Thanks for sharing that, Frank. And Sumeet, now I want to go to the active MSP owner, MSP leader. From your perspective, what are you seeing in the channel?
I think from an M&A perspective, what we're seeing, and, again, my perspective is, sort of we're now coming to the market, right? So it's a little bit of, sort of interactions and conferences with, sort of a wide spectrum of potential buyers. The strategics are always there. The private equities are always there. What's interesting to me is, how many of the larger private equity funds who have not invested in an MSP, in a tech-enabled services play, are now interested, right? And ready to make their quote-unquote first investment. A lot of them have done their thesis over the last few months, still deem the sector to be very attractive, and are very keen to get into their quote-unquote platform investment, right? That is in that 5-10 EBITDA range, if not higher. Now, the other thing we're also seeing is they're not just looking for platform, but, sort of differentiation that's sustained. And so verticalization, as an example, is something that's always eye-catching. In-house cybersecurity skills, right, where the MSP and the MSSP worlds converge, is always interesting. And so, from our perspective, we haven't necessarily triangulated our strategy from a perspective of value in the enterprise context, but value in the client context. And the two converge pretty significantly, Sunny, right? If you do what's right by the client in both having a vertically deep play and bringing this core competencies, including cybersecurity, and in that process demonstrate a healthy double-digit organic growth, right, with low churn, which is, hey, it's a real sustainable business model. The market rewards it, and the larger funds seem to be even more interested now in dipping into the sector.
Thank you for sharing that. The overall market is changing. The MSPs, the way they used to operate, that's changing. Now, I want to go into a little bit more the maturity level of MSPs. Because one thing that I know when I go talk to many our MSP partners, where they're getting bigger, and the maturity level is the main kind of focus right now, that can we raise that operational maturity level. And one thing that I was reflecting on when I started going to these conferences in, I think, 2005, like majority of the MSPs, like 5-10 people shops. Frank, if you know what I'm talking about. What year did you start, Frank?
I started the MSP around 2005.
2005, yeah. So 2003 I started, and then I started going to conferences, peer groups, and it used to be like 5 people, 10 people, 15 people shops, and it was break fix. The channel has evolved. Then there was a lot of like we started in our India office as MSP in 2007. But when I used to go to peer groups, a lot of people had overall questions in terms of how can you do this? What are your clients going to think? There was no movement in terms of, like growing your business beyond your block or your city. Now, as part of, so the book that is being launched, it's called The Secret to Building Winning Teams, my second book. And as part of that book, I studied a lot of borderless businesses, or businesses where they don't see boundaries. It could be a thinking barrier or thinking boundary. It could be one's personal bias. It could be overall the way you're thinking as an entrepreneur. Are you thinking abundance, or you're thinking limitations, or fixed mindset? And So one thing that I did, this is, I'm super excited about this one. In Manila, when I arrived, I'm like, it was Starbucks. So in the building that we are in BGC in Manila, there's Starbucks, right? Then I'm like, did the founder of Starbucks, when he opened up at Pike Place in Seattle, that's where it started, the first store. How did he think about that business, right? So he focused on quality. He created a differentiator. He created something which was different as a coffee shop. Then it probably grew beyond Seattle boundaries. Then probably this after the city-state boundaries, then country boundaries. And now just in Philippines, Sumeet and Frank, there are 447 locations, and the revenue is about close to $900 million per annum. So a Seattle-based business with the borderless business thinking and abundance mindset thinking as an entrepreneur, they grew to this worldwide brand, which is bringing a lot of revenue to the US company. And now MSPs. So then, in around our block, on the right side we have Starbucks, Smith. Then there is McDonald's. In front of the building is 7-Eleven. On the left side is KFC and Burger King.
It's like you never left the US, basically.
I hope you're not eating all this, Sonny. It's not good for you.
No. I just stay at Hyatt. That's another Grand Hyatt, which is like one block from here, and then eat there. Okay, coming back to the MSPs that are being now borderless, it could be evergreen. So now I see that there is overall new thinking, new perspective that, hey, if I do want to expand as a business, I do need to think different, right? So for many different reasons, it could be the 24/7 shift hours. It could be the labor cost, which is normally the MSP's biggest cost. But a lot of people are still resistant to kind of think beyond their block, right? So I'm coming to you, Frank, that like in terms of what you are seeing, where things are going from the MSPs market, where do you see, like there are always a few national level MSPs, right? It used to be just all covered. Now there are many more. Like, how do you see MSPs overall growth and maturity level, and they're thinking about growing their business beyond their city or state?
Yeah, it's a great question. I did coincidentally sell my MSP to Evergreen, so I was one of the acquisitions that they made. So I think to answer the question though, we have to look really how a lot of MSPs start their business, and I think in this industry in particular, a lot of them are started by the technician who loves what they do. They're not necessarily really good at running the business, right? I myself had an engineering background. Nobody taught me the business side of it. I had to force myself to understand and to learn and to adapt. But we see tons of new MSPs being started, the one-man shops. Those are not business entrepreneurs. Those are techs, right? So I think right out of the gate, the MSP mindset isn't really set up for a borderless business. It's set up that I'm a tech and I'm going to work in my local area because that's what I can physically cover. And you hire some other techs around you, but traditionally it's always been that regionalized play because you can kind of control it. Now, I do think where this differs from, Starbucks is that this is a service delivery type of business, right? Where there is a relationship. Starbucks, you just want a cup of coffee. You'll never see that barista probably ever again anyway. So who cares who makes it for you? So I think there's a difference in how we approach it. I think that for MSPs to grow and for it to be more regionalized, it always has to be through acquisition. So if I in New Jersey wanted to establish a footprint in Chicago, I don't think anybody in Chicago would be excited to know that I was a New Jersey-based business, but I just opened up a shop and now I'm prospecting there. I think it's easier and faster to find a business that's already established, an MSP in Chicago that's looking to sell, and acquire them and then roll them into the larger entity because there's already a local presence and relationship that's built there. I think that's a faster means to an end. And I think that's more of what we're seeing today. In addition to that, I do think there are better programs. When we started our MSP, there was only a few coaching peer groups. Now there's a lot of them. And I think a lot of them are designed more not around the techie side of it, but around how to operationally set your business up for growth, how to do that correctly, and what margins to look at, what smart numbers to keep track of, the things that will allow you to scale and get there more quickly. So I think new MSPs today have a better way to get there more quickly. I think though traditionally it's through acquisition that you see the borderless mentality kind of taking root.
And Sumeet, what's your take on this in terms of the overall future of MSPs in terms of, okay, do you see them staying more regional, or do you see that expansion happening where MSPs are like typical? I mean, there will be all type of MSPs, but where do you see overall that movement going?
Sure. So, I think over the last 4 years, we've intentionally engineered a successful pivot from a regional to a national play. And that happened with an intense amount of focus, Sonny. So I think a few things aided and abetted in that. One is obviously COVID blurred boundaries for everyone, right? So, it didn't matter from an employee perspective. Our workforce went from, I would say, more than half of it being in a location to now less than a third being location to that prior location. And mostly, even then, they're, sort of a hybrid remote model. Right? But for us, the things that from a calibration perspective helped with the pivot, right? And helped us achieve the, mid 20s growth rate in the verticals we're in is one is being very focused on the verticals we're in. So healthcare provider segment in that, FQHCs, the ambulatory clinics, for the accounting work, the accounting CPA vertical, which Frank's worked in as well, or, with his prior MSP, and the legal vertical. In all three, what we said was, look, for us, we want to kind of work with the 50 plus employee businesses. They have some level of IT, and we want to get away from the us versus them. It's just like IT viewing us as a threat to us being a partnership with that IT team, with the idea of us moving them up the stack, right? What's not happening and what those limited IT resources are not getting to do is any sort of innovation, any sort of end user engagement to understand how to improve and enhance that experience, right? And really work on the higher level of the food chain. So having that value proposition to say we want to serve the larger businesses with some level of IT that we can partner with them alleviated the need for us to have physical field presence right across the US, which often is a real and tremendous barrier to go pivoting from a regional to a national play. And then the vertical focus further helps. So now when we talk to a lot of our clients across each of the verticals, right, what they really care about, Sunny, is, hey, abstract that complexity. Tell me what other CPA firms are doing and how you're applying that in a ready context. When there are issues, proactively bring that to me. So I think bringing that vertical expertise matters more to them than somebody that's right down the street from them, right? It's again about the value perception and, shifting that piece much more to, hey, how can I help you be a better CPA firm, reduce friction, apply AI, apply cloud to gain scale? A lot of these CPA firms, Sunny, as an example, have now workforces in India, in Philippines, right? They never had that 5, 6, 8 years ago. They're dealing with scale issues. They're dealing with security issues. So, having the answers to those, right, becomes far more important than having a regional local presence in Savannah next door to them.
What is the biggest obstacle that you see in terms of most important numbers for MSP entrepreneurs?
Yeah, if there's one word I would use is focus or lack thereof, right? I think just focus is key, right? Having a very well-defined business model, right? That then ties back to the market need that's well articulated, right? I have myself been an entrepreneur, you are, Sunny, and we've gone through the ups and downs, and there's a early stage where you say yes to everything and you say you'll figure it out, right? And you're like, biting your lip, but you got payroll to pay, right? To getting to a point where you start to mature and say, look, what is the core that I'm really good at, right? Frank's been through that too. And he found 4 verticals that he was good at. We found a certain set of verticals and competencies, and we said, let's double down. Let's make sure that those are well articulated, well understood. I think it's important to really define the core in a distinct manner, in a manner where you can put pen to paper. Discipline and focus, Sunny, is key, right? Because that helps build velocity in a big way.
Yeah. Frank, what do you see as the biggest challenge that MSPs are facing today?
So I think the villain for MSPs is profitability. If you look at the business services that most of an MSP's customers have, you've got IT, right, for what we provide as an MSP. You have accounting and you have legal, right? So those are the 3, I would say, main business services that you see. If your attorney or your accountant is out for a week, your business will still continue forward, right? There might be some edge cases where you're waiting on something, but they could afford to, to delay that, right? If your IT is out for hours or a day, let alone a week, there's no way you can function, right? So look how critical the MSP's role is. Yet what we see is that the profitability of MSP, their gross margins are typically 1/3 of what the accountant and the attorney is, right? And that's just not right philosophically. There's an issue there. So why is that? Well, so a couple of things that I believe. One is that MSPs struggle to sell, right? They struggle to sell the value of their solutions. And so many times, in order to get those solutions sold, they lower their price. As you lower your price, your COGS don't go down, right? So you're compressing what your gross margins are. And you make it more difficult to do the very thing that you talked about, Sumeet and Sunny, which was to deliver your service, right, in the proper way, because you don't have the margins to hire the people or invest in the platforms and systems. The other thing is COGS, right, cost of goods sold. And I see far too many MSPs just chasing the latest shiny blinking thing. And these days there are so many great, I think, platforms, and Kaseya has one. I'll do a little plug with IT Complete. Fred Picola's vision was to create a platform such that the COGS were low, but the efficiency and the integrations and automations were high. So, when we look at the margins, if we could lower the COGS down, now we're expanding. And if you had to lower your price, you still have good gross margin in there. So I see now opportunity for, especially for the newer MSPs entering this, to structure this in such a way that they could achieve scale and deliver those services with good profit margins so much more easily than we could when we first started our MSPs. So, for me, that's one of the, I think, focuses that, we strive to help MSPs here at Kaseya, is to solve the problem of profitability.
Profitability being one of the challenges that you highlighted, and having the right rate card and having commitment to stick with the rate card is important. So what are the other success strategies that you recommend MSPs can consider, adopt to stay profitable and cash confident?
So I think just an outside in focus on what the client needs, right? Which is what led to our expansion into cybersecurity 2 years ago. And, just Sunny, that was a decision point, which is, hey, you go with an MSSP and partner with them. The problem is, it's, as Frank would tell you, it's just as much effort to sell the managed security play as it is to sell the managed infrastructure piece. And only if we're going to make a resell margin of whatever, 20-25%, right? You're not going to tell the rep, I'm going to commission you differently. So how do you think about innovation, and what do you think about what needs to be in-house, right, becomes key? And so we took the bold, at that point, risky but bold step of saying, we're just going to build that cybersecurity competency internally, right? Build or acquire. We tried to acquire, but we end up building it. And what that allows us to do is, again, drop the 55, 60% gross margins down, right? And continue to invest, to your point. So how we think about the services portfolio, focusing more on what the client needs and how we bring that value, right, in a manner that is good for the client and good for the bottom line is equally key, right? And those tough decisions as you think about the expansion of the portfolio. Automation never goes out of style, right? We're always getting better and better at it, and having a concerted focus there, to always look at the forest from the trees and say, where can we reduce friction for the client? Where can we digitize the client experience? Where we can remove friction for the employee base is good. It's a win-win-win all the way around, right? And helps from a scale perspective as well. And certainly partnering, with you, like, what we've done, which is to say, let's dissect that value chain, right? Where do we add the most value? Where can we partner and deliver even more value effectively? And so a plug for you and IT by Design, right? And, being very intentional in deconstructing that value chain as well.
Thank you, Sumeet. And Frank, like if the profit is a friction, what are the other strategies other than what other things are possible for MSPs to remove this profit friction in their business?
Yeah, so I think it's efficiency. It's being able to do more with less. One of the things that I was able to do early on in my MSPs, I partnered with a cloud platform. It was a VMware based Citrix driven platform that was great 12 years ago when we were deploying apps that were traditionally on-prem. By partnering, I was able to share in the service delivery expense. So I didn't have to hire the level 3 individuals. They had them. I could focus on level 1 and 2, and I was able to do more with less. And I think part of Fred's vision with the platform, on top of putting those dollars back into MSP's pockets, is also creating now, with steps towards AI, is the automations. We're seeing so many things that we can do now at the platform. You mentioned billing. If you're using, Autotask in addition to our price, we can pass all the costs of all the subscriptions right into the agreements. That saves hours and hours on a weekly basis or a monthly basis for an MSP. We used to spend a ton of time reconciling, and all that, creates overhead for you. It also, if you get the billing wrong, it erodes confidence, and then you have to spend time with the customers re-explaining those invoices. And sometimes they want to then get off of auto pay because they don't trust that you're billing them correctly. There's so many things related to that bleed towards bleed down efficiency, right? So for us, it's really about putting those dollars back in your pocket on the COGS side, and then allowing you to use that platform to do more with less and more accurately. That's the key, is accuracy, right? So if we can automate it, we remove the human element, which means we can be more accurate, which means that we're really hitting on all of our goals that lead to really good service delivery and low friction deliverability of those products and services.
Yeah, so I think the overall the running lean is important, but I think that's one of the overall challenge when you are I have seen that the same MSP entrepreneur, when they were private, they were taking time to make harder decisions. And then when they have now investors and they have to sit in that boardroom every quarter, then they're forced to make harder decisions faster. And that's what it takes to really having that courage to make harder decisions faster, to run lean and run profitable as a business. So any last thought, Sumeet and Frank? We can come to you, Sumeet, first. Any last thought that you want to share with the channel, with our MSP peers?
No, I think, look, I feel like we're blessed. I wake up every day, to your point, right? Just saying what a great space to be in, right? Sort of we haven't even spoken about AI and all of the disruption, but all of the opportunity that it's going to create, and who best to navigate this, right? In partnership with our clients, but us. So, I think humility, warns us we can't sit here, you, I, Frank, and envision what the workplace of the future looks like 5 years from now, let alone 3 years from now, but understand and comprehend that it's going to be radically different, right? With the pace and innovation that's taking place on the, sort of Gen AI front and the AI front more broadly. And I think that's an exciting time for us as managed services providers to continue to obsess on value creation, right? With a profitable discipline model, sort of being key and core, and know that, if we do the right thing and deliver a great service and, continue to look ahead, there's always room and opportunity for growth.
Thank you. And Frank, any actionable advice you have for our MSP peers?
Yeah, I think to echo what Sumeet said, this is a golden era for MSPs right now. We are in such a great position with great set of tools, automations, platforms. I think, in terms of actionable items, I would say is just make sure that you're running your business to sell it tomorrow, even if you're not trying to sell it tomorrow, right? Because a business that's, great to sell is also a business that's great to run. And I think that that's what you want to do. You don't want to wait until you're ready to sell it to try to get your act together, whether that means focusing on profitability or reducing friction. You want to do that today. There's a lot of great tools and platforms out there that you could take advantage of, Peer, etc. But that would be my best advice. Run the business like you want to sell it right out of the gate. I think you'll scale faster. Your customers will love you. You're doing, yeoman's work. It's such an important industry, and the time is right. We've got great tools to deliver our services, and I think the sky is the limit for MSPs right now.
Yeah. So what I'm hearing is more of a healthy business. Run healthy business every day, every year. And don't, even if you don't have any immediate exit plan, even then look at your business as, okay, if I were to sell today, what it means. And that makes your business a healthy business. And also healthy business also leads to healthy life, because for entrepreneurs, when they are putting everything on the line, when business is not doing well, their overall well-being is also impacted. So staying healthy means, because it's interconnected, keeping your business healthy. And when your business is healthy, what that means is that you as an entrepreneur, you are cash confident, and your culture, the culture confidence score and the cash confidence score, because it's all interconnected, that stays high, and you're growing, you're expanding, you're profitable, you're referable, and you are innovating, creating efficiencies in the marketplace, creating that value with those efficiencies, and you are doing well as an entrepreneur, as byproduct of that value creation and experience creation, to Sumeet's point. So I truly appreciate you taking the time and sharing your thinking. And Frank and Sumeet, I truly appreciate you.
Thank you again, Sunny. It was truly a pleasure to share the platform with you and Frank. It was a great conversation.
Yeah, likewise. Thanks so much for having me be here, Sumeet. It's a pleasure to meet you. And Sunny, I hope to see you around New Jersey soon.
Yeah, thank you.
Take care. Bye.
Thank you for watching Sunny's Silver Linings. Don't forget to like, share, and subscribe. See you next time.